hope everybody's having a wonderful day. Welcome back to another episode with Market Mastery 360. Today we're going to be discussing Tesla earnings and why the stock crashed after it reported earnings. As we can see in front of us, Tesla reported earnings on July 19th, which was yesterday. It was expecting EPS, earnings per share, of 0.82, while it reported 0.91. And then it was expecting revenue of 24.47 billion and reported at 24.93 billion, as you can see in front of you guys. And then as we can see that both earnings, EPS, and revenue were both reported better than expected. Let's take a look at the stock over here. Tesla stock, as we can see right now, it is showing lower lows and lower highs. And as we can see right now, it is pulling down. It is pulling down, making lower lows and lower highs. And let us look, why did Tesla crash even though it reported better than expected earnings? As we can see over here, Tesla stock crashes on anticipated lower production and a real recall. It's Elon Musk. After the earnings was reported, Elon Musk came out with a report saying that basically he's going to cut production, and which in turn will result in a lower sales and lower revenue for the next quarter earnings. So we are expecting a lower earning revenue for the next quarter. And as we can see over here, the stock, we see that it is still reversing and going downwards, and that was after it reported earnings on the 19th. After market, it just crashed and kept on going lower lows. It is a good buy as of right now. I would wait until it crashes more, and it is down 9.7% on the 30-minute chart, as we can see. And then now to take a closer look, let's take a look at the 1-minute chart. As we can see over here, it is advancedly reducing and going down in price. To look at a better version, this is TQQ, a triple leverage ETF. And as we can see over here, TQQ is down as well, triple leverage ETF, and it goes direct collision with the market. TQQ has been slopping down. SQQ, on the other hand, is a triple leverage ETF inverse of the Nasdaq market. So it means when the Nasdaq market goes up, TQQ goes down, and as we can see, it's trading above both the EMA and the MA line, and QQQ, which is the Nasdaq market, is trading below the EMA and the MA line, and we are making this intersection in the EMA and the MA line, which I believe is going to result in potentially more bleeding and more lower lows and more lower highs formed. Just keep an eye on this in the next couple of weeks. Please take a look at different time frames, especially the 5-minute, the 30-minute, and especially over here in consideration to QQQ, which is the Nasdaq market. It is very important to understand that Tesla is a big factor in the Nasdaq market. Let's take a look right now on the Federal Reserve calendar, and as we can see over here, we have FOMC meeting. The FOMC meeting is scheduled for the 26th, and then there is a rate decision to follow on the 27th. As we can see over here, a rate decision is going to follow. It's either the Federal Reserve is going to pivot. Pivoting means that it is going to reduce interest rates, or it's either going to hold it steady. Please be reminded that last meeting the Federal Reserve held interest rates very comparatively steady, and it did not raise it nor did it lower it. Or we could see an increase in interest rates, and as of right now, interest rates are at a high level, and unemployment and the unemployment rate is relatively still steady. But on the other hand, we look at the GDP. The GDP is not growing as much as anticipated, but this is the slowdown that the Federal Reserve is expecting. And a huge factor is inflation. Inflation is slowing down as well. It was reported at 3% 2 weeks ago. I hope this video was informative. Thank you and have a wonderful rest of the day.